Bloomberg Audio Studios. Podcasts, radio, news.
John, as you know, we are doing more and more on housing. We've got a full series underway, and we've got another very special guest today. Today we are speaking again, by the way, with Ray Bolger. Ray is the Senior Mortgage Technical Manager at independent mortgage broker John Charcoal and is something of an authority within the mortgage industry. Ray, welcome. Thank you for joining us.
Pleasure.
Now, Ray, when you've been on podcasts with us before, we've talked about conflict of interest. And people may say, there's a conflict here. Because the question that I'm going to ask you is, why do we need an independent mortgage broker? And you are, of course, an independent mortgage broker. Well, listeners may say, well, he would say that, wouldn't he? So let's just put that to one side. I know that you're going to tell us the things that you would tell us if you didn't have a conflict of interest. Am I right?
Well, where there can be a conflict of interest is if you use a broker that is employed by the estate agent you're buying from. Now, what people, particularly first-time buyers, who by definition are novices at the game, don't always think about is the fact that the estate agent is acting for the vendor. Therefore, they don't have the same responsibility to the purchaser. They're not regulated, although the mortgage broker himself would be, or herself would be. So if you're negotiating with the estate agent, what you don't necessarily want to do is disclose all your cards. And you will be doing that if you actually are dealing with a mortgage broker employed by the estate agent. You may say, well, my maximum price is X, and the broker may know actually it's Y. Always find a professional advisor, and by that I mean solicitors as well as brokers who are not employed by the estate agent that you're buying a property from.
But why would you not use, for example, I mean, let's say you bank with a perfectly respectable high street bank, perhaps you're with First Direct or whatever, and they offer a nice range of mortgages. They already know you, have some oversight of your finances. Why would you not just go to your bank and get an offer from them on the basis that, yeah, mortgages are much of a muchness?
Well, finding a mortgage is not just about getting the best rate. The starting point, frankly, is to understand which lenders have criteria that you can meet. No point in going for a lender that's got the cheapest rate if you're going to get rejected. A broker like John Charcoal will deal with a vast number of lenders. I mean, in any 1 year, we deal with about 100 lenders. Although some of those lenders may only get 1 or 2 cases a year, the key point is a broker will have access to all the different schemes available. And so for some clients, the question will primarily be, what's the best rate? Because that criteria means that they can satisfy most lenders. But for lots of, particularly for first-time buyers and self-employed people, there will be various nuances. And it can make all the difference as to whether you get accepted by how your broker presents the case to the lender. So clearly you've got to be upfront. But there are different ways of presenting a case. If you actually don't present all the positives, the lender may simply look at your situation and think, oh, I don't want to lend to that person. So what a broker will do is go through all your details, do a fact find to get all the relevant information about your personal status, understand what your priorities are, be able to advise you on the pros and cons of taking a floating rate, such as a tracker rate, or a fixed rate, whether it's for 2 years or longer. Then having identified what your requirements are and understanding what the property is, because again, sometimes there will be certain aspects about the property which may not be acceptable to some lenders. Now, a good example is if you're buying a flat above commercial premises, for example. Some lenders will have restrictions on what they'll do with that sort of property. So what you don't want to do is waste time applying to a lender that is never going to lend to you. By that stage, particularly if there's competition for the property, you may actually have lost the property. So a good independent mortgage broker can provide a real benefit to you, not just in terms of getting the best deal, the best rate, but actually in knowing which lenders to talk to. And also, when there is an issue with the application, discussing it with the lender to try and resolve that. Once you've got your mortgage offer, a good broker will keep on top of the situation in a market where interest rates are falling and where it may well be a few months from the time you get your offer to when you complete. If the interest rate drops, the broker can actually rearrange the mortgage and get you a cheaper rate, usually with the same lender. That's all part of the service that most brokers offer. And then the broker should be liaising with the estate agent the estate agent liaising with the solicitor just to make sure the transaction goes smoothly. So what I would recommend people do is, first of all, talk to their friends, business colleagues, relatives, see if they can recommend a good broker. And equally, if there's a broker they recommend, you don't touch with the barge pole. If you can't get a recommendation that way, then you talk to a few brokers, talk to 2 or 3, see on with, because it's very, very important. You've got a good personal relationship with that broker. So, first impressions are important.
Ray, how does your mortgage broker get paid?
The vast majority of lenders, certainly your mainstream lenders, will pay the broker a commission, known in the trade as a procuration fee, and that varies a bit, but typically on a mainstream mortgage, it would be in the region of 0.4, 0.45%, slightly more on buy-to-let mortgages. Many brokers will charge a fee. There are some brokers who don't charge a fee. Typically, they will be brokers who only deal over the telephone. If you want a more personal service, particularly if you want face-to-face advice, then you will probably have to pay a fee. Nobody likes paying out more money than necessary, but equally, if you compromise too much, you sometimes find you actually don't get the service you want.
Hang on, so the person taking out the mortgage will pay the broker a fee, but the lender will also pay the broker a commission. So a broker gets paid from both sides.
Yes, that's right. Basically, the commission paid by the lender will not be enough to cover all the broker's costs. So if the lender didn't pay the broker any commission, then the broker would have to charge a higher fee.
And so would you expect to see the commission on your mortgage rate?
It makes actually no difference, because if a lender was processing the application themselves, they would incur the sort of costs that the broker incurs. They'd have to do all the checks, et cetera, et cetera. So effectively, the broker is saving the lender time by providing the information the lender needs, and also, of course, importantly, not submitting cases to the lender, which they're never going to be able to do, and therefore the lender's not wasting time assessing cases. So lenders see it as a good value paying brokers a fee, because actually it generates business for them, saves them money, and the mere fact that nearly 90% of mortgages go through brokers rather demonstrates that the system works well.
Interesting. Thank you. John?
So obviously right now there are a lot of people who are coming off 2 or 5 year fixes, particularly the 5 years, and they're faced with quite a big jump and want to presumably avoid that as much as possible. So what are the benefits of using a broker for the remortgaging side of things?
Well, the principles, frankly, are exactly the same. When you're coming off a deal, you need to reassess your financial circumstances and decide whether you simply want to keep your mortgage at the same size, and then, what sort of deal to have. You may have had a 2-year deal initially, and it now might be right, perhaps because you feel interest rates have fallen somewhere close to the floor, to take a 5-year fix or even a longer-term fix. Vice versa, you may be coming off a 5-year fix, in which case you'll have been paying a very low rate, and you now need to reassess how long you want to fix for. One of the considerations is how much longer you're going to stay in the property. If you're not confident you're going to stay in the property for at least 5 years, probably better to go for a shorter term deal, because although most mortgages are portable, there's no guarantee you will be able to port the mortgage. So that's a consideration. The question of whether you should go on to a tracker deal or a fixed rate is an important consideration. It may have been right when you took your mortgage out a few years ago to go for a fixed rate. Now rates are coming down, and tracker rates are not much more expensive than fixed rates. Maybe you would prefer a tracker rate to benefit from rates coming down. Having said that, a lot of people really value the fact that with a fixed rate, they know exactly what their monthly payments are, which makes it much easier to budget. Some people have got more flexibility clearly on that than others. So there's all sorts of things to consider, and a good broker is going to be able to talk through the pros and cons of the different mortgage options when you come to remortgage. You also need to consider whether you're remortgaging or doing a product transfer. So there tends to be quite a bit of confusion sometimes on this. A product transfer means you stay with your existing lender, but you take another deal with that same lender. A remortgage is where you change lenders. And if you simply want to keep your mortgage the same size, a product transfer is a very simple process. In most cases, no paperwork's required. If you want to borrow any more money, then you will have to go through exactly the same process if you stay with your existing lender as if you remortgage. So all of these things need to be taken into consideration, and those are the sort of things that a broker can advise on.
You mentioned about mortgage brokers that you would avoid. Are there any red flags that you would say would make somebody think, actually, I shouldn't be dealing with these people? Is there anything obvious? One thing I remember is that a lot of mortgage brokers during the zero interest rate period were kind of giving people implicit advice on where interest rates were going to go next. Anytime I heard that, I thought that's a little bit, pushing the envelope of what you should be doing. But is there anything that would make you be concerned and make you say, no, you shouldn't use this broker?
You can check with the Financial Conduct Authority website that a broker's regulated, but the vast majority are, so it's unlikely that you're going to come across a broker that's not regulated, but that's a check that you can always do. I think, frankly, if you're not getting a recommendation, then looking at broker reviews is a good way of actually seeing, which brokers generally get positive reviews and which brokers to avoid. Also, when you simply make that first phone call, you may get good or bad vibes, but it is quite difficult sometimes to spot the relatively few bad guys straight away. When it comes to advice on interest rates, some brokers are more prepared to talk about that than others. Some brokers, frankly, have more knowledge on that and therefore more capable of talking about that. But at the end of the day, none of us knows what's going to happen. I think this is one reason why a lot of people do favour a fixed rate, because even if they end up paying a little bit more than they might have done with the tracker rate, they at least know what their budget is, and that makes life a lot easier when the mortgage is probably their biggest monthly payment.
I think that probably covers pretty much everything, unless you think there's anything we've really missed, Ray.
No, I'll just say in terms of product transfers and remortgaging, our policy at John Charcoal is that we don't charge a fee on a product transfer because there is less work involved, and therefore the fee we get from the lender is adequate, whereas we would charge it on a remortgage. So the total cost of the deal is clearly important. And when people look at whether to go for a 2 or 5 year deal or perhaps a longer term deal, they'll sometimes simply look at the interest rate and not factor in the other pros and cons. So if you take a 2-year deal, for example, in 2 years' time, you're going to have another set of arrangement fees to pay. Typical mortgage arrangement fee from a lender is £1,000, for example. So it is a bit marginal as to whether you go for a 2 or 5 year deal. Particularly if your mortgage is quite small, where the costs of the mortgage become much more relevant as a percentage, then there's a stronger argument for going for a 5-year deal. Likewise, there are many tracker deals that have no early repayment charges. So if you're coming to the end of a deal now and you're thinking of moving in the next couple of years, then actually a tracker deal probably makes sense, even if it's not the cheapest, because you'll have no early repayment charges and therefore complete flexibility as to when you want to sell the property. So these are the sort of considerations that a good broker is going to discuss with a client, which in many cases the actual borrower may not think about because it's not something they're doing day to day.
Okay, so that's a very good reason to have a broker to talk about all those things that you might not think of if you're just going for a single provider. Ray, amazing. Thank you so much. We really, really appreciate you coming on and talking about all these things, and I hope that our listeners are finding them helpful. Thanks for listening to this week's Merryn Talks Your Money. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on X or Twitter at MerrynSW and John_Stepek. This episode was produced by Sam Asadi and Moses Andam. Special thanks to Ray Bulger, and questions and comments on this show and all our shows is always welcome. Our show email is merrynmoney@bloomberg.net.